Last night, Nigeria's CBN governor highlighted some of the country's strongest macro number in years. But can economic reform outrun the security challenges threatening to undermine it all? Good morning and welcome to another power-packed episode of Business Week. This week, the UK slapped on £26 billion in tax rises in Chancellor Reeve's budget, while Bitcoin ETFs are having their worst month ever, hemorrhaging $3.5 billion. Meanwhile, in Africa, Zambia's bonds rallied after S&P lifted its default tag, and Angola opened a $4 billion standalone gas processing plant. In Asia, India posted its fastest growth in 6 quarters despite trade headwinds. And back home here in Nigeria has pulled off an impressive macro hat trick. According to the CBN governor, the CBN held rates at 27% while celebrating 7 months of disinflation. FX reserves are at a 7-year high. And meanwhile, NNPC revenue hit 45 trillion naira with profits up 64%. The AFDB also just approved $500 million for Nigeria's energy transition. And according to CBN, 16 banks have met recapitalization targets. Yet, the Financial Times this week, in an editorial, pointed to the elephant in the room, arguing Nigeria's core challenge isn't just religious tensions, but a state struggling to guarantee security, and that could complicate even the best economic reforms. Later, I'll unpack this tension with renowned economist Bismarck Rwani. If you blinked and missed the big business stories of the week, don't worry, I've got you covered. I'm Rolake Akinkunmi-Fulani. So we start with commodities as usual. Oil and gas prices firmed this week, supported by slightly brighter demand and stronger LNG flows. So what do we have here? Brent and WTI both pushed higher, helped by improved sentiment, I guess, around global demand and US inventories. Natural gas actually led the gains, up by nearly 4%. We're entering the colder weather period in the Northern Hemisphere. We even saw LNG feed gas boosting demand there and propping up prices. Gasoline also posted a lift. It was a steady, modest, upbeat week across the energy commodity spectrum. Let's look at what's happening in Nigerian markets as well. Well, it was a mixed story this week. We saw a jump in activity, but value traded did thing out. The index barely moved, but trading activity picked up sharply week on week, with volume surging more than 170%. And deals up almost 10% week on week. Much of the activity actually came from renewed interest in mid-cap names like Transcon, Fidelity Bank, etc. But despite the busier tape, value traded did fall over 20%, signaling that investors were active but not really taking big bets. Let's scoot over now to African markets. It was a positive week. South Africa and Morocco appeared to be doing most of the heavy lifting there. And if we look at the other stocks, the JSE gained over 1%, helped by stronger performance and with companies like Anglo American, while in Accra, the Ghana Stock Exchange also was in the green. Morocco's Massi was the week's standout, rising more than 2%, lifted by banking names like Attijari Wafa Bank and still attracting inflows. Kenya was the laggard, down over 3%. Safaricom there in particular is still under pressure. Let's scoot over now to Wall Street. It was a powerful week this week. I think softer inflation figures and strong tech momentum did help Wall Street. The Dow, the S&P, NASDAQ, they all finished firmly higher. NASDAQ did lead on a 6% jump actually week on week. And Meta and Nvidia were actually the standout gainers, helping lift broader sentiment across the markets. And markets and investors are still pricing higher odds now of a Fed rate cut. Well, now let's scoot over to my top picks for the week. I'll just move over slightly there so you can see the screen. UK Chancellor Rachel Reeves is the lady of the moment, and mixed reviews as how well she fared on her budget. Now, the big highlight here was that she included $26 billion in tax rises. If you recall, her last budget had about $40 billion in tax rises. The UK middle class is not too happy about that, and many of you would have watched the retort by Tory leader Kemi Badenoch about that budget. It was quite scathing across most analysis, and the big thing here is around 1.7 million more UK citizens will now be paying more taxes. So if you take somebody who's earning like £50,000 a year, they're going to be paying a little over £8,000 more in taxes. And this is considered really problematic. They've accused the government of funding benefits through raising taxes and the impact on business. And the fallout continues in the UK. It's actually a situation to monitor. But the Chancellor has delivered her autumn budget for 2025. Bitcoin ETFs. Now, ETFs are baskets of investments that can be traded on stock exchanges. Bitcoin ETFs have had their worst month since February. $3.5 billion worth of exits, outflows from the ETF markets. Now you have ETFs for Bitcoins, Ethereum, Solana, other types of cryptocurrency. The last sort of volume of outflows we had was about 3.8 billion back in January. Now it's a worst performing run for Bitcoin for the last 6 months or so. Bitcoin is around $80,000. At one point this year, Bitcoin was inching towards the $120,000 mark. So that's a significant collapse there in market sentiment. And there isn't one single factor that is actually impacting that market route for Bitcoin, which just goes to highlight just how speculative of an investment strategy Bitcoin really is. It's if you really have loose change to play with. Anyways, the Zambian dollar bonds have rallied on the back of S&P Global Ratings Agency, essentially upgrading the country to CCC+. It's no longer in default status. If you recall, it was the first African country in the post-pandemic era to record a sovereign default. Now, over 90% of Gambians' debt has been restructured. A smaller portion hasn't, but most of its external and bilateral commercial creditors are fairly satisfied with restructuring. We saw a rally in its 2033 bonds, and we've also seen a rise in its copper output, production, reserves at about $5.2 billion now in Zambia. So the country does appear to be on relatively cautiously stable economic ground as it tries to meet all these conditions set by the Bretton Woods institution. So good news there, S&P lifts the country out of default status. Angola has launched a $4 billion standalone, here we call it non-associated gas processing plant, to help service the external market in terms of LNG imports, as well as domestic needs in industrials, petrochemicals, and of course, the domestic power sector. This is part of the Novo, an investment by the Novo Consortio of Angola and companies like Azul, Chevron, and other multinationals. They're helping to really push gas development in the country on the back of some of the regulatory and policy reforms we've seen in the Angolan market. And my last story on the top picks is India has posted its fastest growth in 6 quarters. This is really interesting because India's external trade has actually dropped by about 8%, and trade with the US, given some of the trade tensions, has actually dropped. But what this shows is that domestic consumption in the Indian market remains pretty robust. That's not necessarily a trend we're seeing in the Chinese market. So the fastest GDP growth in 6 quarters, posting at about 8.2%, about maybe 200 basis points above what most analysts had predicted there for GDP forecasts in India. So showing signs of a very resilient economy through different global trade headwinds. That's it for my top picks from around the world this week. Let's now take you to some of our other top stories from around the world. We start with tech. Alibaba's AI-powered smart glasses went on sale on Thursday as the company ramps up its consumer AI focus in an increasingly competitive market. The Quark AI glasses come in 2 variants, the S1 and G1, integrating Alibaba's Qwen AI models with its newly launched Qwen app. Users can control the device via voice commands to carry out tasks. Incredible innovation there. Still on artificial intelligence, AI is not a core part of operations at most of the world's central banks, and digital assets remain off the table. That's not according to me. It's according to a survey released Wednesday by the official Monetary and Financial Institutions Forum, which surveyed 10 central banks from Europe, Africa, Latin America, and Asia, between them managing roughly $6.5 trillion in assets. Institutions that have explored AI most deeply are the most cautious about risks, with the primary concern being that AI-driven behavior could and we quote, accelerate future crisis. We'll be peeling back the layer on that particular statement later in the show. Now to Ghana. Ghana's central bank has slashed its benchmark rate by 350 basis points to 18%, one of its most aggressive policy easings in recent years. The move comes as inflation has tumbled from a 54% peak in December 2022 to single digits. Governor Johnson Asiama said high real interest rates had created room to ease policy and support growth. Angola has agreed with JP Morgan to roll over a $1 billion loan that was due at year end, according to the finance ministry. The news pushed yields on Angola's 2032 bonds down 9 basis points to 9.86%, a sharp drop from nearly 15% in April. And the Africa Development Bank has approved a $500 million loan to Nigeria for the second phase of its economic governance and energy transition support program. The initiative strengthens fiscal policies, drives energy sector reforms, and promotes climate action. The board of directors approved the loan at a meeting in Abidjan covering the 2024 and 2025 fiscal years. And in an interesting development and very worrying, the Ogun State government has called for an immediate temporary suspension of lead ingot exportation from the state as part of urgent measures to address concerns over alleged lead poisoning in Ogijo, Shagamu local government area of Ogun State in southwest Nigeria. The Commissioner for Environment, Ola Oresoya, made the announcement during an inspection tour in Ogijo following a viral video alleging hazardous contamination in the area. Oresoya, who was accompanied by experts from the Ministries of Environment and Health, the Ogun State Environmental Protection Agency, OGEPA, and the National Environmental Standards and Regulations Enforcement Agency, NESRIA, disclosed that 7 industries engaged in used lead acid battery recycling in the community have all been shut down. Now, the Nigerian National Petroleum Company Limited has declared a profit after tax of 5.4 trillion naira for 2024, one of its strongest performances since becoming a limited liability company. CEO Bayo Ojulari announced the results Monday in Abuja. The figure represents a 64% year-on-year increase from 3.3 trillion in 2023, driven by higher production volumes, cost-cutting, and improved operational efficiencies. The Central Bank of Nigeria has retained the monetary policy rate at 27%, maintaining its tight monetary stance to rein in inflation and stabilize the foreign exchange market. The decision was announced following the MPC meeting in Abuja, where members voted to keep all policy parameters unchanged. The elevated MPR reflects the CBN's continued aggressive measures to curb rising prices and restore investor confidence. And still on the CBN, the bank has revealed that 16 banks in Nigeria have met its recapitalization threshold, marking steady progress ahead of the March 2026 deadline. Governor Cardoso disclosed this Tuesday during a press briefing following the MPC meeting in Abuja. The figure improved from 14 banks in September, signaling growing compliance across the sector. And, all good things coming to threes. Still on the CBN, the governor says Nigeria has entered a new phase of macroeconomic stability after 2 years of difficult reforms. Mr. Cardoso stated this in Lagos on Friday while delivering the keynote at the Chartered Institute of Bankers of Nigeria's 60th Annual Bankers Dinner. He said the reforms had restored investor confidence, strengthened the naira, and placed the economy on a firmer path to sustainable growth.
We gather tonight at a pivotal moment of economic transition. The reforms we have undertaken over the past year have been both challenging and essential. 1 year ago, I shared with this audience, many of whom are here tonight, that through targeted policies, transparent market operations, effective coordination between monetary and fiscal authorities, and a commitment to rebuild trust, we will stabilize the exchange rate, curb inflation, strengthen banks' capital buffers, and foster an environment conducive to the success of both businesses and individuals.
I'll be talking more about CBN governor's speech from the bankers' dinner later on in the show. Well, that's it for our top stories for now.